Is a big change coming to Cranbrook's real estate market? Here's your update, your market update for November 2025, coming to you live from Craig Bell. Cranbrook's market just threw us a curveball. Sales are way up, prices are climbing, and buyers are back in full force. But is this a true rebound or a last burst before the market cools for winter? Let's dive into the numbers and see what's really driving in Cranbrook's momentum. If you've been watching Cranbrook's real estate scene this year, you've noticed it. More for sale signs, faster sales, and more confidence. Today, I'll walk you through the official October numbers from our Association of Interior Realtors and translate them into what they really mean for our Cranbrook as we head into winter 2025. Here's a quick snapshot for Cranbrook straight from the board. Single family homes, 27 sales, that's up 107.7% year over year. Think about it. That's a big number. Yep. The benchmark price is $563,800. That's up 4.8%. That's the largest sales surge in the entire Kootenay region this month. Townhomes, they had one sale, down 80% year over year, but benchmark price rose to $376,000. That's up about 4.5%. Supply here is tight. Only a handful of attached listings are there and available citywide. Condos and apartments, 7 sales, up 75% year over year. Benchmark price $247,400. That's down 1.8%. Volume though is up. Values are holding within 2% of last year. So let's put this across the region for context. Kootenay total sales are 300. That's plus 33.9% year over year. New listings 362 plus 9.4%. Active listings 1,602 plus 1.9%. Regional benchmarks, single family homes, 635,800 plus 5.3%. Townhomes, 522,100. That's plus 8.3%. Condos, 314,600. That's down 3.8%. Average days to sell, single family homes, 72. Townhouses, 108. And 93 days it's going to take you to sell that condo. Cranbrook is clearly outperforming the region in sales growth and holding steady in prices. Okay, right? That's a lot of info. What does it really mean? What's happening? What's going on here? Cranbrook has emerged as a regional hub again. Strong employment, solid migration from Alberta and the lower mainland, and a sweet spot price that sits below FERNIE but above SPARWOOD. 107% sales jump isn't a fluke. It's pent-up demand releasing as rates ease. At the same time, the prices are up just under 5%, showing buyers are still willing to stretch but not overpay. And this is what a smart recovery looks like. Volume first, then values will follow. So, heading into the future here, what are the key trends to watch? The trend I'm watching is multi-segment rebalancing. Condos and townhomes were quiet for most of 2024. Now they're taking back up in volume. Detached homes remain the driver, but buyers are starting to consider attached options as prices continue to rise. If this pattern continues through Q1 2026, expect modest price gains across all segments, but not a return to bidding war territory. Mind you, we are seeing some. So here's a bit of context for you from a local point of view. Why is Cranbrook so different? And Cranbrook's market has its own engine. It's the largest city in the Kootenays with steady employment, regional healthcare, infrastructure expansion, and that anchor demand. We're also seeing migration from nearby towns. FERNIE sellers are cashing out, selling their home for $1 million. relocating to Cranbrook, buying that brand new home for $600 grand, and putting $400 grand in their jeans. Looking for, they come to Cranbrook and get a larger lot, bigger house, and lower prices. Add in the college students, healthcare, construction trades, and you get consistent local demand, not just seasonal or recreational buyers. And that is why Cranbrook typically stabilizes the entire Kootenay region. When it goes up, the region follows, usually within the quarter. Now let's factor in the rates. The Bank of Canada cut its overnight rate again in late October to 2.25%, the lowest since 2022. Retail rates, 5 years fixed, 3.79, 5-year variable, 3.45, and prime is approximately 4.45%. And that is breathing new life into mortgage approvals and move-up buyers. But remember, about 75% of Canadian mortgages will renew by the end of 2026, many at higher payments. Cranbrook homeowners are better positioned than big city owners because average mortgages are smaller, but renewal pressure could add some inventory through 2026. So, what should a buyer do? For buyers in Cranbrook, act now. While the choice is up and competition is manageable, sales are rising, but inventory hasn't caught up yet. Get pre-approved and secure a rate hold. You'll lock in while rates are the lowest in 3 years. Look at townhomes and condos. They're still discounted versus detached and offer better cash flow for investors. Negotiate on days on market. Homes setting 30 plus days often signal motivated sellers. And then plan for the spring. If this momentum continues, expect firmer prices in March. What should sellers do? Well, for sellers in Cranbrook, the window is excellent but not automatic. You will need to price realistically. Overpricing, even by 2 or 3%, can stall activity now that buyers have options. Invest in presentation. Pro photos, video tours, social media are all standard expectations nowadays. Time the market. List in late fall or early February puts you ahead of the spring wave. Highlight affordability and lifestyle. Many incoming buyers are comparing you to FERNIE or Kelowna prices and show the real value difference. Be patient but strategic. Average days on market is nearly 2 months. That's healthy. It'll get longer if you price it too high, and expect serious buyers, not browsers. This is what I would watch for. Heading into 2026, watch for these key signals in Cranbrook. Inventory direction. If new listings stay under 400 region-wide, prices should hold firm. Interest rate path. Further cuts will stimulate move-up buyers. Migration trends. Continued inflow from Alberta and FERNIE, even SPARWOOD, supports detached demand. Regional ripple. Cranbrook usually sets the tone for KIMBERLEY, INVERMERE, and CRESTON markets by the spring. The bottom line here. Cranbrook's real estate market isn't just stable, it's surging in volume and firming in price. Detached homes at $563,000 are up 4.8%. Condos at $247,000 and sales doubling year over year tell a clear story. Confidence has returned. We're seeing measured recovery, not a bubble. More listings are coming, more buyers are qualifying, and Cranbrook is quietly setting the pace for the entire Kootenay region. My name is Craig Bell. I'm helping you decode, understand, and get the goods on the Kootenay real estate market, one city and small town at a time. If you found this helpful, interesting, slightly amusing, hit the like button, reach out, let's have a chat. Happy to talk to you about anything. Thank you for watching and join me next month. And in the meantime, if you want to see what's going on in FERNIE, SPARWOOD, KIMBERLEY, or INVERMERE, I've done some videos on those ones as well.